Hi, thanks for joining us. I'm Carrick Sears,
And I'm Vicente and Carrick.
and we are your multifamily advisors with SVN here in Phoenix, Arizona. We want to take this time to tell you a little bit about what's going on in our multifamily market and a review of the first half of 2018. Vicente, can you tell us about the rents?
Yeah, it's a good place to start. So on average, the first half of the year, we saw rents increase about 5% across the board. Your luxury class saw that a little bit lower, maybe like 4.5%. But when you worked your way down to the working class apartments, you saw a little bit higher at about 5.5% or so. So on average, we did see about 5% rent growth for the Phoenix market. And then when you look at the nation as a whole, we actually performed a lot better than the nation. The nation's about 2.9% in income growth right now. Sorry, in rent growth right now, whereas Phoenix is, like I said before, 5% on the rent growth. So we're doing a lot better than the national average right now.
And then when we take a look at the employment percentage change, Phoenix is definitely a lot higher than the U.S. We are at around 3%, where in the U.S. the employment growth is just under 2%. So definitely a lot higher there with employment. And we actually saw 60,000 jobs added in the last 12 months. So we have a lot of employment growth, a lot of people moving here. We had 74,000 people moving here over the last 12 months. And those are all people that need places to stay and looking for apartments to rent.
Exactly. Those are high and paid jobs too. So.
Yeah, that's right. And in fact, when we take a look at the supply, we had 3,800 units brought online during the first half of this year from new supply. And we have over 16,000 units currently being built in the pipeline. A lot of those are going to be delivered in the second half, and then some of those into 2019 of the units that are under construction right now. But we still don't believe we are overbuilt. We have as many people as we have moving here. We still believe we need more apartments, and everybody is looking for places to live with all of the influx of population here.
Absolutely.
Now, if we take a look at the sales transactions that occurred in the first half of this year, the 100-plus unit properties, we had a significant volume increase when we compare the first half of 2018 to the first half of 2017. We were up about 46%, 2.7 billion traded in total volume of multifamily properties over 100 units. The price per unit on this was about $156,000 a unit, which was 37% higher than the previous year. And when we looked at price per square foot, we were $167 a square foot, and that was a 24% increase over the prior year. Now, a little bit of this was due to the year build. Last year we were 1987 average. This year we're 1991 average. So a little bit newer product with some of the Class A newer build properties selling, but definitely significant more demand for apartments and than supply, and that's causing the price increase here. We have a lot of clients coming from California and the East Coast buying apartments here in Phoenix because the cap rates are higher than they are on the West Coast, and investors can do better here with their investments.
Exactly.
Now, when we take a look at the top three transactions by sales price per unit, we had the Hanover on Mill Avenue trade at $278,000 a unit.
Yep, Goldman Sachs just bought that.
Yeah. And then we had the Vela Tempe trade at $252,000 a unit. And then we had the Broadstone at Fashion Center in Chandler, and that traded at $250,000 a unit. So those were kind of a view of our top transactions by sales price for the first half of this year.
And now I'll talk more about the 10 and 99 unit properties. So we are also seeing increases across the board there. The first half of this year, there was a 10% increase from the first half of last year. We sold about $266 million in transactions that we saw in this market the first half for that asset type. And the price per door actually jumped from $88,000 a unit to $95,000 a unit, which is an 8% increase. The price per square foot jumped 4% to $117 a square foot. And the year built was still pretty much the same. It went from 1968 to 1970, so still that older vintage property where you're seeing a lot of value-add opportunities.
Sounds great. Can you tell us about a particular transaction that traded in the first half of this year that we were involved in?
I can actually. There's a great property, Casa La Jolla, near downtown Glendale, and it's actually a great example of one of the cornerstones of SVN, which is exposing a property to as many people as possible through as many avenues as possible to bring your client the best sales price. So effectively, we were able to do this by pricing the property competitively at a $65,000 per door sales price, a true 7 cap. And because of that competitive pricing, we got lots of offers. It ended up creating a bidding war, and a local investor was actually the one that ended up paying the most for the property over list price. And that person was, like I said, represented by an outside brokerage firm. So that proves the study that we've already been talking about, that 9.6% difference study that shows when you do list your property with a company like us that proactively cooperates with other brokers, you on average get about 9% more for your property because so many more buyers do see the property. So this is an excellent example of the SVN difference in how we operate and the benefit of working with us.
And ultimately, our client got a much higher sales price that way.
Absolutely,
in their best
we
interest.
did.
Great. And now, can you tell us a little bit about the top 3 transactions by sales price per unit in the first half of this year?
So in Scottsdale, we saw the first and second highest price per unit. The first one was Dusk at Scottsdale. Those 41 units sold for $283,000 a door. And then there was 14 units on 3rd Street in Scottsdale that sold for $213,000 a door. That was an older property in 1958 that was constructed. The Dusk was actually just built in 2016. And then rounding out the 3rd highest transaction by price per square foot, by unit, was the Arcadia Edge in Arcadia, and that sold for $180,000 per unit, and that was just 23 units built in 1967.
Great. Well, that gives you an idea of the first half of this year of our multifamily market here in Phoenix. It's a great place to invest. We have job growth, population growth, income growth, and it's going to continue to do well into the future. We encourage you to reach out to us if you haven't recently. Our numbers are here on the screen, and we'd be happy to talk to you about continuing to invest here in Phoenix in our multifamily market.
Absolutely.
Thank you.
Have a good one.